So Tesla released their quarter two earnings data for 2023 yesterday, showing record-breaking quarterly earnings approaching close to $25 billion of total revenue in a single quarter. That reflected an increase of 47% year-on-year growth, narrowly beating analyst predictions that the electric vehicle giant would top $24.7 billion this quarter. Tesla has seen substantial growth in their vehicle delivery numbers, and they've seen growth in other parts of the business, such as their energy storage solutions. From an investor perspective, Tesla's share price is up by nearly 140% this year alone, so definitely not results to be sniffed at. Now, there's no denying that things continue to look promising for Tesla, but are these latest financials really as rosy as they look on the surface? And is Tesla an attractive investment moving forward? Full disclosure, I don't currently hold any Tesla stocks, but I do have a little bit of exposure to Tesla through index funds. There's around half of my portfolio is invested in ETFs that track the Nasdaq 100 or the S&P 500. And I've been deliberating over whether to go the whole hog and buy into Tesla for some time now, as I do like to hold shares in individual growth companies as well as index funds. As a result, I've been closely monitoring Tesla's position over the last couple of months and was really keen to see what their quarter two earnings would look like. These were released as planned yesterday, so I thought I would quickly pull together this video for any investors that are in a similar position to myself and might be looking to acquire some Tesla stocks for the first time, or if you're already a shareholder and you're contemplating increasing your Tesla holdings, then this video might be useful as well. Like I said, there were some good headline results reported in Tesla's earnings call yesterday, but it wasn't all sunshine and roses. And while there didn't seem to be any major red flags, there were some results that didn't quite hit the mark. Perhaps the biggest miss was the slip in Tesla's gross profit margins to 18.2% over the last 3 months, where a gross margin of 18.8% was forecasted by Wall Street analysts. This is the lowest margin we've seen for Tesla since the end of 2017. Now, this wasn't a huge surprise, as most analysts had been expecting a steeper decline after flagging car sales at the start of 2023 led to Tesla slashing prices of all 4 of its electric vehicle models between January and April this year. You've got to remember that you have legacy competitors such as Ford in the US and BYD in China snapping at the heels of Tesla with their own fleet of electric vehicles, so the market is fast becoming ultra competitive. In fact, Ford is already kind of engaged in a price war with Tesla as it cut prices this year on its own electrical vehicles, and BYD recently overtook Tesla to become the top-selling EV brand in the world. With increasing competition and economic uncertainty, it's really no huge surprise that Tesla's profit margins have taken a hit this last quarter. But even at these comparatively low levels, Tesla's gross profit margin exceeds that of most traditional car makers out there. And there may yet be more price cutting from Tesla to come, as on the earnings call yesterday, Elon Musk confirmed Tesla would slash prices again if interest rates increase further this year to reduce the financing costs for its customers. At the moment, it seems the company is less concerned about short-term margins and more focused on selling vehicles, as their prices will increase once Tesla is able to progress with its FSD or full self-driving software. Tesla's discounting strategy did pay off to some extent though, as Tesla reported strong vehicle delivery numbers, with deliveries up 83% compared to last year's second quarter. Tesla sold a record 466,140 vehicles worldwide from April through to June, almost doubling the 250,000 it sold during the same period a year earlier. But the question remains as to whether Tesla's discounting strategy can boost sales while keeping healthy profit margins. In yesterday's results, we saw that Tesla's operating margin, which is basically how efficient these sales are turned into pre-tax profits, fell to 9.6% in the second quarter. This figure has been trending downwards over the last year, so current sector and economic conditions really are putting some pressure on the company's profitability. I guess the key thing to remember is that these figures capture a moment in time and they're historic, so it's really important to look at the overall trajectory of a company like Tesla and maybe get an understanding of what it might be capable of during your investment horizon. I think it's fair to say that economic conditions have been really challenging for most sectors across the board over the last few years. So in the grand scheme of things, Tesla has fared amazingly well. I certainly think the long-term drivers for growth remain in place, and there are naturally going to be some short-term headwinds given the current macroeconomic environment we find ourselves in now, and probably for most of the year. There are still some question marks around some of the technology projects Tesla continues to promote. The FSD technology is one sticking point where, despite the name full self-driving, Tesla cars with the software enabled cannot drive themselves, and drivers must be ready to intervene at all times. On yesterday's earnings call, Elon Musk did talk up Tesla's work on a new machine learning system it calls Dojo, which is basically a huge supercomputer it's designed and built over the last few years to train and improve its self-driving software. There was also a bit of vagueness on yesterday's call around precise specs and delivery dates for the Cybertruck and Tesla's first fully autonomous robo-taxi vehicle. Elon Musk did mention that after years of delays, Tesla should be on track to deliver the long-awaited Cybertruck by the end of the year. It looks like something from a futuristic sci-fi film, but apparently has the capability to challenge all of the top-selling pickup trucks. So it'll be interesting to see how this one does pan out. Tesla really do have a lot of good things going for them, and it's definitely not all doom and gloom. While profit growth wasn't the best, the price cuts Tesla implemented in the first half of the year don't seem to have done a huge amount of damage to the company's fundamentals. Tesla's stock received a big boost this year after Ford, General Motors, and a raft of other car makers and EV charging firms said they would adopt Tesla's EV charging technology, which just goes to show the advantage Tesla carries on the EV market. The investor excitement we've seen around artificial intelligence as a result has also helped bolster the company's stock price. Elon Musk also mentioned on yesterday's call that Tesla were in talks with a major original equipment manufacturer to license its FSD software, but didn't go as far as to name the company. So we'll see if that partnership comes to fruition at some point in the future. Tesla are also working on some really interesting projects that have nothing to do with electric vehicles, but are still in their infancy phase. Projects like the Tesla Bot, which is a humanoid robot that can complete boring or unsafe human tasks, or the Neuralink brain implant linked to a robotic arm or leg. In addition to this, they are building on their power generation and storage provisions like solar panels and batteries. Tesla are also poised to enter the UK energy market by launching Tesla Electric, which would supply electricity to domestic households like they currently do in Texas. I think most long-term investors in Tesla are looking at the bigger picture and realize that it's more than just an electric vehicle maker. I guess ultimately the hope is that Tesla makes big fat profits from the software side of its developing business, things like updating vehicles with the driverless car technology has been developing for some time now. Although macroeconomic conditions still remain a bit rocky, I think I'm personally going to keep an eye on what the Tesla share price does over the coming days, maybe weeks, and probably pick up some shares if I feel like the price is at a good entry point for me. The share price remained relatively flat at about the $292 mark when the earnings report was first released, and dipped a little during the conference call with Tesla executives. So I will just see how things go. I'm not in a huge rush to jump in, as like I said, I've got a little bit of exposure through the ETFs I'm investing in, so I'm going to wait and see for a bit now. Let me know in the comments if you have any thoughts or concerns about Tesla's latest results, or if you'll be making any changes to your portfolio when it comes to Tesla stock. Or maybe you've just watched this video but you're not interested in Tesla as a position at all. It'll be interesting just to know your thoughts, so do leave them down in the comments below. In the meantime, thanks so much for watching, and I will see you in the next video.